Good morning from our global headquarters in New York. I'm Menace Craney. You're welcome to Bloomberg Brief. Let's set that agenda. A policy pivot for China to a more proactive stance. The biggest move since 2011. Middle East on edge. U.S. strikes dozens of ISIS targets as Syrian president flees to Moscow. And President-elect Trump says he's been in touch with China's Xi in his latest interview. Good morning to you. You have just seen 57 closing record highs. We're steady this morning at 6,095. There seems to be a pretty high probability of a December rate cut. What will the CPI tell us this week? Oppenheimer's Stolzos comes out with a new note, 7,100. By the end of 2025, there's a resilience in this market. There's a broadening of this market. By the way, the Russell showing perhaps that resilience and broadening to a wall of worry. But we are at a watershed point for productivity and AI. So let's see what the day brings to us. Roll it over, have a look at the bond market. We dropped by 7 basis points at one juncture on the twos, the very short end of the curve. We're steady as she goes this morning. We wait for the CPI, 3%, 0.3%, I should say, on the core CPI, and 3.3% year on year. Let me take you to the other stories that we're keeping a track of here on Bloomberg Brief. We're also keeping an eye on Omicron and Interpublic, as Wall Street Journal reports the two are in talks to create the world's largest advertising company. Supermicro jumping as NASDAQ has granted the firm more time to become compliant with the listing rules. And shares in Reddit rise after Morgan Stanley upgrade the stock to overweight from equal weight and almost tripled the price target on the stock to a new street high. In just a few moments, we'll catch up with Andrew Sheets from Morgan Stanley. Thierry Wizman of Macquarie join me a little bit later on this morning. So foreign exchange and risk very much in focus. I want to show you what's happening with dollar yuan. The dollar, we know, has been on a tear higher, and nowhere is that more noticeable than perhaps in the yuan, rallying by nearly 2.5%. In other words, the yuan down. We have these headlines in the past 24 hours from China that the Politburo is going to shift its policy for the first time since 2011. The language, moderately loose versus prudent. ANZ are saying this is an unprecedented move, a more proactive policy stance, monetary policy, along with fiscal policy, and this is about stabilizing, getting out the national team, stabilizing the property market and the stock markets. What does that do to animal spirits of risk? Morgan Stanley's Andrew Sheets writes the following: global credit is on borrowed time. Strong current conditions linger into the first half of next year, keeping spreads tight. Expect a weaker second half as animal spirits grow and economic outcomes widen. Good morning, Andrew, to you. I just want to deal with the context of animal spirits. There's no doubt about it. The PBOC this morning, or over the past 24 hours, they're going into what I would call a very active defense play. What does that do to the animal spirits of risk? Let's just broaden the topic for a moment.
Thanks. Good morning. It's great to be here with you. So in our view, the animal spirits for the moment, we think will be more concentrated in developed markets and markets like the U.S. Our economists remain somewhat below consensus on growth in China. And while more stimulus is potentially helpful, in our view, what we will need to see change the situation in a larger way is something that really impacts demand to a larger extent than what we've seen so far. So let's see what we get from the policy easing side, but we think it might take much larger shifts in the social safety net, in spending, boosting demand, rather than subsidizing supply, that those types of things would have the biggest impact on our growth forecasts. Whereas, rate cuts, they help at the margin, but they're potentially more likely to continue to keep the currency soft, which is in line with our forecast. So, for now, when we think about those animal spirits, we're thinking about M&A, we're thinking about corporate confidence, we're thinking about kind of investor confidence rising even further, but that might be more of a U.S. story for the time being.
Well, let's just talk about that, because you very clearly divide next year into two halves. Maybe not as precisely as that, but you say there's probably six more months left in terms of this euphoric momentum in the market. Then we morph to a much more volatile regime. Is that because we begin to understand more nuances and detail of the Trump policies?
Yeah, that's a very big part of it. So the way that our public policy team at Morgan Stanley is thinking about these policy changes is fast announcement, but slower implementation. And so, we think early on we'll see announcements around tariffs, we'll see announcements around immigration, but the actual implementation of those things, the implementation that would potentially drive, say, more inflation in the case of tariffs, that will happen slower and later. And so what you end up with is you have a pretty good U.S. economy right now. That is continuing to linger and continuing to have momentum into the first half of next year. So the data remains good. You continue to have strong growth, moderating inflation. The Fed is still cutting. The ECB is still cutting. All of that, I'd say, quite constructive narrative from this year, from 2024, really lingers into 2025. Now, the challenge is that by the time you get to the middle of the year, more of the impact of those policies starts to become apparent. We start to see the Fed pausing as inflation starts to be a little bit stickier, and they've cut rates by that point all the way down to 3 5/8%. And we also think at that point maybe kind of corporate animal spirits have accelerated further and start to be a little bit less credit friendly than they've been in the past.
In terms of the narrative out there in the market, there is the view that Scott Bessent is going to be the rational, the guardrail, perhaps even a little bit of fiscal probity in the room. Do you believe that? Or if I look at the sequence of events so far, it's still very much President-elect Donald Trump is setting that agenda, and everybody else in this cabinet needs to come to heel quite quickly?
Yeah, so I actually think I think it's a great question because there's a lot we don't know, and in some ways this is the easy part. This is dessert first in some ways, where everything is still possible. We haven't had the full cabinet announced. We haven't seen the actual policy proposals. This is a point where the market is free to dream and imagine that their preferred version of the next administration will be the version that we get, and that's a powerful force. Optimism, the dream is an incredibly powerful force in markets. Now, as you get into January, we hit a first waypoint of that. We'll start to see more concrete proposals. And certainly when we are out talking with investors, there are a very wide range of expectations around things like tariffs that will start to narrow. And then again, I think as we get further into the year, you'll see that range of outcomes or that uncertainty narrow further as we know more of what we'll get. But specifically on fiscal policy, I think that's the area where we think actually the change will be the smallest. That Republicans have a very small majority in the House of Representatives. That's going to make it, we think, quite hard to enact larger changes of policy. And because the Tax Cut and Jobs Act is expiring, there's a lot of work that needs to be done in figuring out how you extend that. So, our view is that on the fiscal side, even though I think there's initially been a lot of excitement around a Republican sweep, we think fiscal change is ultimately going to come in a little bit smaller. And that's a big reason why at Morgan Stanley, we think bond yields are going to move lower next year, not higher.
It's interesting because a lot of people are sort of saying to us, it is about the sequencing. They will go hard, heavy, and early in a huge demand on tax cuts because that majority dissipates over time. And that sort of chimes for you. So again, this gives us the alpha in credit and treasuries in the first 6-7 months.
Yeah, that's very much how we're thinking about it. That kind of the first half of the year is the easier part. That's when the data is still holding up. Disinflation is still in train. Rates are coming down. The Fed is still cutting. The ECB is still cutting. And where I think, we think you're still going to see these negotiations where the uncertainty in some ways is to the benefit of the market. Investors can still imagine that uncertainty will break in a way that they like. And then indeed, I think as you go further into the year, you start to hit more of the potential downsides of negative supply shocks, be they tariffs or immigration. But again, it's a great point on fiscal uncertainty. There are a lot of different ways that this can break. Our view is that narrow majority is going to delay it. There are other views out in the market that narrow majority will lead to a different outcome. Mm-hmm. And again, the clock starts to tick on the midterms, before you know it.
You're back on the hustings again, Andrew, before we've even had the inauguration. But I do love your line. It's dessert first, and we dare to dream for 2025. Andrew, thank you very much. Andrew Sheets of Morgan Stanley. Other stories training on your Bloomberg terminal this Monday morning. This is what we've got. South Korean President Yoon escapes impeachment. The Justice Ministry has banned him from traveling overseas as a result of the ongoing investigations into his brief declaration of martial law. Police are reportedly also considering whether to put Yoon under emergency arrest. UBS CEO Sergio Motti says the incoming U.S. administration's potential move to raise tariffs on trading partners could increase risks next year. He spoke to Bloomberg earlier.
The acceleration of geopolitical events coupled with potential escalations on the macroeconomic front, tariff, protectionism, it's definitely something that has to be watched. On the other end, we still see consumers and the economy quite resilient despite all these challenges.
More cases of mysterious flu-like illness labeled Disease X were reported in the Democratic Republic of Congo. Now, over 400 cases of the unidentified illnesses marked by fever, headache, cough, runny nose, and body aches have been reported since late October. The World Health Organization has dispatched a rapid response team to help investigate. Coming up, Assad's government toppled. The stunning turn of events that ended the president's 13-year rule in Syria. That's next on Bloomberg.
We're clear-eyed about the fact that ISIS will try to take advantage of any vacuum to reestablish its capabilities, to create a safe haven. We will not let that happen.
President Biden speaking after President Assad's fall in Syria, leading to chaos as people took to the streets in Damascus to celebrate his demise. Joining me now from Istanbul is Bloomberg's Honor and Honor. The president saying this is a moment of risk and great uncertainty. The United States, we know, attacking some ISIS targets. But in terms of who is in control, what is the scale of the political vacuum on the ground in Syria right now? Good morning.
Good morning. The political vacuum is definitely there. The Islamist rebels who led much of the advance over the last 10 days are now in charge in Damascus, the capital, as well as some other large cities such as Aleppo, Hamas and Hama. But outside there, we're seeing many groups trying to carve out larger areas of influence and lock in gains made during the last 10 days. You have Turkish-backed forces in the northwest, US-backed Kurdish forces in the northeast, as well as some other various US-backed forces in the south of the country. And as we've seen overnight, there are still ISIS remnants in parts of central Syria where there have been heavy US bombings against their positions. The next big thing to watch in terms of the political vacuum and what's happening in Syria is going to be in Damascus, where we are waiting to see a political transition. Both the head of HTS, the Islamist group that basically drove the last 10 days advance on the capital, and the prime minister, the last prime minister appointed by outgoing President Assad, have said that they want to work together on an orderly and swift political transition. But has there been such a transition yet? No, and there are no indications as to when it will.
And, and there's the big risk is, of course, that Syria goes the way of Libya. Factions, various religious factions divide the country. We've heard President Biden's scenario for Syria, but the incoming president, President Trump, he's been on Truth Social and he's making it very clear, this is not our fight.
Yeah, and President-elect Donald Trump's those comments over the weekend kind of left whatever Biden has to say a bit of a moot point. His position from the get-go has been that the U.S. troops should not be in Syria, and that's something that he tried to engineer their removal back in 2018 and 19, although unsuccessfully. But right now, yes, the U.S. main U.S. policy objective in Syria remains the same, which is to make sure that ISIS doesn't come back in a post-Assad era. Now, but there is a major flashpoint, possible flashpoint to watch for as the U.S. tries to keep that objective, and that is the fact that the U.S. has so far been using the Kurdish forces, the PYD or SDF, whatever you want to call it, as its main instrument to achieve that. Now, if the U.S. wants to come out of Syria, obviously there's going to be possibly a big clash between those Kurdish forces and Turkey in the north, which also wants to create its own sphere of influence and expand it and lock in gaze and basically push the Kurds away from its borders. And that's something that U.S. Senator for South Carolina, Lindsey Graham, already warned against as a possible flashpoint in U.S. policy, foreign policy going forward this morning.
Honor, thank you very much for the very latest on Syria. Honor Ant in Istanbul. To the U.S., President-elect Donald Trump made his return to the world stage, meeting with the French President Emmanuel Macron and Ukraine's Volodymyr Zelensky. That was in Paris on Saturday. He was in the city for the reopening of Notre Dame, the cathedral. Officials close to Macron and Zelensky said the meeting was positive. Bloomberg's Kevin Whitelaw joins us. Obviously, this was a significant political opportunity for Macron to show a very big presence on the global stage, given his domestic situation. But it's an interesting imagery of President-elect Macron and Zelensky. This just shows us perhaps the speed with which we will move towards some kind of discussion between Russia and the rest of the world.
Well, that's right. It shows that, once again, Donald Trump is not waiting for Inauguration Day to begin, trying to make his impact felt, but also just be seen acting on the world stage. And so we don't really have a good sense of what came out of those meetings. It does seem to have been very preliminary conversations. But, in the aftermath, Donald Trump put out a post about, something about, 400,000 losses in the Ukrainian war, prompting Zelensky to have to come back and provide a rare disclosure of at least their version of the Ukrainian death toll for soldiers that have been killed, which is 43,000. Now, it's possible Trump was actually referring to killed and wounded. It's a little unclear exactly what was happening, but you're already seeing a little bit of that disruptive effect going on as Donald Trump is out there making pronouncements, people understanding that everyone's listening, and now, everyone else having to react to it even before he's in the White House.
Well, it is about setting political agenda before he even sits into the Oval Office. Now, look, on Sunday, Trump gave another TV interview. This time it was with Meet the Press with Christian Welker. The conversation was around the Fed chair. Let's just take a listen.
I don't see it, but I think if I told him to, he would. But if I asked him to, he probably wouldn't. But if I told him to, he would. You don't have plans to do that right now? No, I don't.
The nuances in the word "if I asked him" or "if I told him." I mean, again, there's nothing spectacularly new in this discussion, but it will help perhaps settle some people's nerves that this is not a road that he's immediately traveling. We can talk about whether there's a shadow chair or not.
Well, that's right. I mean, we are, I think, going to have this willy won't he conversation about Trump and in terms of what he's going to do with the Fed chairman for a while. And I think, for Trump, there's some value he sees in preserving some of that ambiguity, perhaps giving him some leverage over it. But we do know that Trump is going to measure his success in part, at least, on sort of how the stock market's doing. And for now, he at least wants to try to, keep that market reasonably soothed and reassured. So, I think keeping Powell in the role for now is good. But, in those remarks, you did still hear a little bit of that, notion reminding everyone that he could still remove him if he decided he wanted to.
Absolutely. The difference between if I ask him or if I tell him. I like it. Preserving the ambiguity. It's the power of the ambiguity. Kevin, thank you very much. Kevin Whitelaw there with the very latest on President-elect moves over the weekend. Let me just show you what's going on with the commodity market. You've had this quite dramatic pivot from the Politburo in China, talking about a really quite dramatic move to a modestly loose versus prudent policy. So what you've got here is crude bid up, more so on the China story, really, rather than the political vacuum that's left behind in Syria. Saudi Arabia cutting their oil prices by 80 cents over the weekend. Copper and iron ore, again, it depends how unprecedented this policy shift will be from China. And you can certainly see that. And, of course, Citi on Friday had just downgraded their copper outlook to 8,750 from 10,250. But at the moment, commodities seem to like what they possibly will hear from the Politburo and the authorities in China. Coming up, a $765 million decision where Juan Soto is reportedly playing next season. You get the details right here on Bloomberg Brief. Good morning. Bloomberg Brief this Monday morning. I'm Macquarie in New York. Let's get you up to speed with your front pages. This is what is making headlines around the world. First up, the Journal. Omnicom is in advanced talks to buy Interpublic, I should say. The deal would create the world's largest advertising firm. It would likely have a value for Interpublic between $13 and $14 billion. That excludes the debt. Bloomberg leads with US Bitcoin ETFs, nearly $10 billion piling in since the election. The total assets of these funds have now reached approximately $113 billion. President-elect Trump's embrace of the crypto market has produced, quite literally, a boom all the way around in that space. And ESPN reporting that Juan Soto has decided to sign with the New York Mets in a record-breaking contract. The 26-year-old has signed a deal worth $716 million over 15 years and no deferred money. He played outfield for the New York Yankees during the 2024 season. Good luck to him, the contract and the cash. Talking of dollars, let me just show you what's going on in the FX market. Thierry Wizman joins me very shortly. The dollar starts very little bit of a back foot here. I can tell you the optimism among the hedge fund world out there. They've cut their shorts by 50%. The hedgies have boosted their longs in the dollar by 10%. So they see another pro-dollar narrative in the next 6 months. Aussie dollar, I think, is ground zero for the highest beta currency reaction to the policy shifts from the Politburo, which are going to move to, in their language, a more proactive fiscal policy versus a prudent stance. You have a little bit of a strengthening in the yuan, but ground zero for reaction function to what the Chinese do. It is those exporters of iron ore, the Aussies. From our global headquarters in New York, you're welcome to Bloomberg Brief. I'm Macquarie. Let's set your agenda. A policy pivot for China, a more proactive stance, the biggest shift since 2011. Middle East on edge, US strikes dozens of ISIS targets as Syrian president flees to Moscow. And President-elect Trump says he's been in touch with China's Xi in his latest interview. Good morning to you. We're knocking on the door of a new week when CPI will define the trajectory and the next move from the Fed. You're flat. I mean, you can't get any more excited by that. But you've had 57 record closing highs in the S&P 500 so far this year. Swaps say 80-90% probability of a December rate cut. There's a cracking new note out from Oppenheimer's Stoltzfus, basically saying 7,100 by the end of 2025. There's a resilience in this equity market, a broadening, and that will surmount the wall of worry. And one of the things that will surmount the wall of worry is the watershed moment in productivity from AI. Roll it over, have a look at the bond market. Short end of the curve dropped on Friday. This week it will be about CPI, 3% on the core year on year and plus 0.3%. There's no reason to pause is the consensus. The unemployment rate ticks up to 4.2%. That will validate the Fed cutting rates is this consensus in my inbox this morning. But first up, the top markets headline of the day, China's Politburo announcing it will embrace a moderately loose strategy next year. For more, let's get to Ven Ram. He joins me. Ven, moderately loose. This is, some would say, the most pivotal shift that they've seen in language versus 2011. Moderately loose versus prudent. What does moderately loose, in your opinion, equate to in monetary policy and fiscal policy? Good morning.
Morning, Manners. I think that moderately loose, I would interpret it to mean a further weakening of the yuan. This year, if you've seen the yuan fixing and the yuan spot, they haven't allowed it to weaken very much. We are talking about 1.5%, 2%. But next year, I think that would mean a lot more, say 3 to 4%. They need that kind of adjustment because if you look at China's economy, they've got 3 pillars of growth. One is property markets, which is in the doldrums. And then consumption, which of course is weak because China's consumers are traditionally savers, not spenders. The third big pillar of the economy is exports. And that's where they can leverage the most. And that's the sector that they need to exploit. And in order to push up exports, in all the friend-shoring and all that has taken place since 2020, what they need is a weaker yuan. And that's what will get them the export growth that they need, which is why I think that today's acknowledgement is a big confession, and I think it's a step in the right direction.
Okay, some would say it's a hellishly defensive play by the Politburo ahead of what could come down on them in terms of tariffs in 2025. Ven, thank you very much. Ven Ram on the very latest policy adjustments from the Politburo in China. My guest this morning is Thierry Wizman, Global FX Rates and Strategist at Macquarie Group. Great timing.
Absolutely.
We'll book you in on the key day. This is an acknowledgement, Ven says, a confession. I put it to you, this is just classic defensive play ahead of the risk of tariffs from the United States of America 2025.
I agree. If these tariffs do happen against China, and if they're as aggressive as President-elect Trump has made them out to be, I think we will see dollar yuan rise again, and I think it will be engineered by the PBOC and the policymakers in China. One has to keep in mind that in 2018, this was the play, right? We saw dollar yuan at around 6.2, 6.3 in late 2017. It then rose to above 7 by the end of the Trump administration. And then when Biden came in, dollar yuan fell again on the premise that we didn't have to worry as much about an anti-China policy coming out of the U.S. So the yuan does move with the administrations and who's in charge in the U.S. And I suspect what the Politburo is doing is simply preparing for the prospect of tariffs.
How much weakness are they prepared to have? I mean, if you think it moved to 720 in 2018, but we're at 727 at the moment. So they perhaps just don't have the same latitude to let it off the leash as much, do they?
That's true. There are some considerations that have to do with things apart from trade competitiveness. Certainly the Politburo and the PBOC and the other policymakers do not want to engender capital flight from China by virtue of the public and the investor base understanding that there's going to be a very large devaluation or depreciation of the yuan. I think what they need to do is to manage the process. And the way to do this is to use the tools they have at their disposal, including the daily fix. We do think that dollar yuan will go higher next year as we see these tariffs start to be applied. We have a target of 7.5, at least as a first stop for where dollar yuan will go next year.
If it breaks 7.5, do you risk capital flight briefly before we move on?
At some level, you do risk capital flight, but it will not be just about where the dollar yuan is at the time that the capital flight ensues. I think other considerations will be relevant here. How well is the economy doing? How aggressive are the policies? Is the commercial relationship between the U.S. and China breaking down further through non-tariff barriers, for example? I think all of these things are a consideration for investors when they decide from onshore players if they're going to keep their money offshore.
Yeah, look, part of the argument would be is a reasonable amount of capital has already shifted. There's an interesting piece of global theater over the weekend. Macron, Zelensky, and President-elect Trump in Paris. And this sort of, you make this point, which is stand back from this and look at it from the point of view. Trudeau's already got on the plane. Sheinbaum is pushing back quite aggressively. But what you have here is Europe with a security need to do a Faustian bargain over trade. They have much more at play to do a trade deal quicker and earlier with Donald Trump, don't they?
Yes, and I think that's an artifact of the weakness of the European economy. But we can see where the contours of a grand compromise will come, right? It will become from Europe acceding to peace in the Russia-Ukraine situation, or at least a ceasefire. It'll come by way of the Europeans agreeing to buy more natural gas from the U.S. It'll come by way of the Europeans agreeing to step up defense expenditures, as President-elect Trump has asked them to do. Those would be all parts of, all elements, if you will, of a grand compromise that we could see happening or taking shape in 2025. Of course, if this were all to happen, it wouldn't be terrible for the euro, but certainly the premise that the Europeans are going to be buying more from the U.S. would not flatter the current account balances, the external balances of the euro area. You would see their trade surplus come down, their current account surplus come down a little bit.
That grand bargain, if I look at a euro-dollar chart, we're 105.81. 2 weeks ago, if you were sitting in the chair 2 weeks ago, we'd probably been talking to you about parity. The world has moved on from that. I just wonder, this is not a do-whatever-it-takes moment for the euro. So is that grand bargain now being priced in to put a kind of floor in the euro at the moment?
So it's not a panic situation in the sense that I don't think that the ECB needs to cut rates even more aggressively than they've signaled in the short term. From a perspective of monetary policy, I think they're doing everything they should be doing. They've signaled that to the public. I do think, however, that from a structural perspective, Europe hasn't done enough and they need to do more. Reduce the dependence of industry on government. Make the labor market more flexible. Reduce the amount of energy dependency on the East and the Mideast. I mean, there are things structurally that Europe needs to do to promote innovation, to promote productivity growth. This was the essence, effectively, of Mario Draghi's report. And in that respect, there is a lot more they can do, and they need to get on with doing it.
And that's where that spread and that differential just lives for the next 3 to 5 years in terms of productivity between the United States of America and Europe. Tell me this, one of the best lines I read over the weekend was this: Donald Trump wants a global dollar, but he doesn't want one that shuts U.S. exporters out of the markets. I was thinking, what is a global dollar? What is a tolerated dollar for Besant and Trump? Because they had very different ideas about what the dollar should be, don't they?
I certainly think that over the last few weeks, we have seen this coming administration adopt a strong dollar policy. I know that sounds strange because Trump 1.0 was a weak dollar policy and initiatives around that, but Trump 2.0 is going to be a strong dollar policy, certainly in the sense that they do not want to see a weak dollar promote inflation in the U.S. Keep in mind, I think that President-elect Trump knows very well that what killed the Biden administration, effectively reduced their approval in the electorate's eye, was inflation. He certainly would not want to punish himself with inflation in the U.S. in the next 4 years. And one aspect of ensuring that inflation does not recur in the U.S. is to have a strong dollar. It doesn't mean that the U.S. will intervene in the FX markets, but I think it really means at this point that at the very least the U.S. has to ensure that its allies and also its non-allies do not dump the dollar as a reserve currency.
Briefly before we go, what have you learned between Trudeau visiting, Sheinbaum on the tape, and Macron, standing side by side? What have we learned about what we're going to get in 2025, briefly?
I think we're going to get concessions. I think from the U.S.'s trading partners, with the possible exception of China, because this is a strategic competitive situation and not just an economic situation, we're going to get concessions. We're going to get concessions from Mexico with regard to the border. We're going to get concessions with Canada with regard to the border, if that's what Trump wants. We're going to get concessions from the Europeans with regard to purchasing more U.S. goods.
And as you say, the tariff agenda is much more likely to stick on China than it is on Europe or Canada. Terry, thank you so much for being with us. Terry Wizman, reacting immediately to the Politburo's news over the weekend on China policy. Coming up, President-elect Trump says he has no plans to remove Fed Chair Powell from his post. More on the latest interview. That's next on Bloomberg. Good morning from New York.
I don't see it, but I think if I told him to, he would. But if I asked him to, he probably wouldn't. But if I told him to, he would.
You don't have plans to do that right now?
No, I don't.
That was President Donald Trump giving his first TV interview after the elections. He spoke to Meet the Press with Christian Welker on Sunday. Joining me now is Meghan Crane of Bloomberg Government. Meghan, good to see you this morning. These comments indicate question about Fed Chair Powell's future settled. I like what one of our colleagues said a little bit earlier, which was it still preserves a certain amount of ambiguity because there's a distance between if I ask you to go or whether I tell you to go.
Yeah, good morning. So I thought these comments were really interesting. They are the first interview from the president-elect since the election. Lots to sort of chew on there. His things about Powell were kind of classic Trump in the fact that he leaves open the possibility to change his mind. So that is very classic Donald Trump. Answer to a direct question is probably not or not right now. So it's unclear. He doesn't plan to do it right now is sort of is all we can sort of take from that, right? It doesn't really take us to the end of Powell's term in any way.
No, it doesn't. And certainly we also got an incremental shift forward. We understand now President-elect Donald Trump has spoken to the Chinese leader Xi Jinping. he has made it very clear about border security with Mexico, border security with Canada, and here it is about fentanyl. It is one of the underlying issues that he's been going after with China. Again, it's about what comes next. You've seen a policy shift from the Politburo, but this is the start of a much bigger conversation between the Trump White House elect and Xi Jinping.
Yeah, it was very interesting weekend for the president-elect. A lot of foreign policy, which is unusual for, a president-elect, although he is, of course, an unusual winner of an election coming into a second term. On China, he only confirmed that there were communications, and the Chinese sort of agreed with that, confirmed that as well. What they spoke about is unclear, sort of what that means going forward is unclear. The two men last met in 2019. It's just a new, I think it's really interesting in the sort of pre-tariffs age, Trump talking about tariffs from 10% to 60% on Chinese goods. China is really in a position where they just have to talk to him. They have to figure out where he's going to come up, what he's going to come up with as far as a policy towards them in the end. Again, Trump leaves open the possibilities of changing his mind at the last minute. That's a pretty standard way of presenting ideas from him. So, how that manifests is really going to be interesting to watch.
Okay, Megan, thank you very much. Megan Crane from Bloomberg News. To the Middle East, U.S. is striking dozens of ISIS targets in central Syria. This is after President al-Assad's government falls amid a stunning territorial advance by the opposition groups over the past few days. Let's take a listen to what President Biden had to say.
We're clear-eyed about the fact that ISIS will try to take advantage of any vacuum to reestablish its capabilities and to create a safe haven. We will not let that happen.
Let's get to Abu Dhabi. Jumana Basachi joins me now. Jumana, President Biden says this is a moment of risk and uncertainty, but the U.S. has taken some quite aggressive action, we could say, in striking some key ISIS targets in the past 24 hours.
Yeah, well, let me just bring it back to, of course, I am live from Abu Dhabi Finance Week. And when you think about the objectives of the region, the financial objectives, and it's a region that you've covered for a very long time, key to that is stability, geopolitical stability. It's something that the UAE and Saudi Arabia have been talking about consistently over the course of the last year. And the perception from the region is what has happened is a massive seismic event. This is effectively the end of more than 4 decades of rule for Assad, the Assad family, the father and son. They had pursued a very brutal, oppressive regime. There was no room for political dissidents. And so there's loads of mixed emotions right now. Within Syria, many scenes of jubilation. People are happy that the regime is gone, but lots of questions still about what is to follow. And we know that the rebel group who was leading the charge, HTS as is known, Hayat Tahrir al-Sham, has been led by a figure who in the past had affiliations with Al-Qaeda. He's been trying to moderate his stance in recent years and in recent interviews. He's been trying to suggest that they are more moderate figures than what their backgrounds would suggest. But still, lots of questions about what the transition is going to look like, who actually is going to govern Syria, who is going to fill the vacuum that was filled by the Assad regime over the last 4 decades or so. And so you think of it from the regional perspective, and yes, it is a moment of change, but it also is a moment of deep instability.
Well, as I said, the reaction function from the Biden administration has been really to target those pockets of ISIS on the ground in Syria. The risk is that Syria goes the way of Libya and divides upon religious and sectarian grounds. But there is a new incoming president, Donald Trump, and his view on Truth Social is this is not our fight. So this is a very, very stark difference.
Yeah, we've spoken to a lot of analysts this morning, and they say President Trump may say that it's not his fight, but unfortunately, it will have to be part on the U.S.'s radar, and namely not just because of those 900 troops that are stationed mostly in the northeastern part of the country, but because Syria has for so long been a melting pot and a center where all of these fault lines that you speak about around the world have a presence. You, in the past, had the Iranian and Iranian proxies alongside Russia come in to support President Assad at the time of the Arab Spring. The fact that the regime fell so quickly quickly this time is probably reflective of the fact that, number one, Iran and its proxies around the region are operating in a diminished capacity. Number two, Russia is diverted, but then also tells you that if you want to think big picture about the direction of travel for the region as a whole and this geopolitical stability that I referenced in the first segment, then you will have to think about the trajectory of Syria, simply because there are so many other actors stationed there, and it is going to be integral to the future of the Middle East as a whole.
Well, certainly just think of the periphery to Turkey and to Israel. Israel, with Assad gone from Damascus, Iran no longer perhaps there to reinforce the Hezbollah story. So there are a number of nuances there. Jemana, great reporting. Great work at Abu Dhabi Finance Week with Jemana Basecci. Quick snapshot of commodities. Commodities are moving much more aggressively on the news flow from China than they are from the disruption and the vacuum in the Middle East. China moving to a moderately loose policy versus a prudent policy. So you're seeing oil and iron ore really pacing ahead as the Chinese promise to deal with the housing market and indeed infuse a new lease of life to the Chinese economy. A little bit earlier, Jemana caught up with Sergio Motti, the UBS CEO, at Abu Dhabi Finance Week. Let's take a listen.
All these geopolitical events haven't really triggered any more chain events and consequences, also in financial markets. So that's positive. So I think that, but one cannot be complacent. The acceleration of geopolitical events coupled with potential escalations on the macroeconomic front, tariff, protectionism, it's definitely something that has to be watched. On the other end, we still see consumers and the economy quite resilient despite all these challenges. So, but we have to watch carefully those developments and not to be complacent.
How do you see the outlook for the global economy next year? It feels as though you're going to get pockets of growth. The U.S. perhaps one of them, Europe less so. How do you square it all together?
Well, if you look at the fact that rates may come off, inflation seems to be under control for the time being, and potential deregulation in the U.S. Fostering M&A activity, that could be beneficial for the economy and for markets. On the other end, as we mentioned, tariff may create some potential inflationary consequences. So, it's still very uncertain. I do believe that next year we're going to still continue to see a lot of volatility in financial markets, and therefore one has to be very diversified and look at opportunities to deploy cash in a diversified manner.
What would you say the risk-taking appetite is for UBS clients right now?
Well, risk appetite is balanced. I do believe that we see for clients opportunities to redeploy cash as we expect rates to come off. But I would say that not a lot of risk appetite in this environment. Balanced and diversification is key.
UBS CEO Sergio Motti there, speaking exclusively to Bloomberg's Jemana Basecci in Abu Dhabi at the Finance Week. Coming up in the show, set you up for your trading week. It is CPI, more inflation data could define the trajectory for the Fed. The ECB decision up as well, right here on Bloomberg. Set you up for your week. It's all about inflation. CPI hits the tape on Wednesday, plus PPI on Thursday, and another round of jobless claims. Thursday, it is the ECB and their rate decision. We just had a conversation with Thierry Wizman. He says, look, it's very unlikely that they're going to have to go for a much larger cut. Stocks to watch, Palantir gaining after announcing their plans to team up with weapons maker Anduril to speed adoption of AI in defense. Tesla also a little bit stronger this morning, up 1.2%, continuing as Bank of America raised the target there. Oracle earnings after the market closed today. The report is for rising sales on the cloud product as well as a bit of an upbeat outlook. I want to leave you with a snapshot of what's going on in the foreign exchange market. Going back to the conversations that we've just had, we have this shift in policy from the Politburo to more proactive in China. The yuan strengthens a little bit, but the Aussie dollar is flying higher.